The opportunities that hotel investors really like the best are ones that are value add or redevelopment opportunities. So something that you can sink your teeth into, change of use for sure, and we've seen a number of hotels convert to student housing and seniors residences. We also see straight up value enhancement, investing lots of capital into the hotel, either to change the brand or maintain existing brand standards. And with that, we see a real increase in, and especially in the primary markets, in operating performance. Higher quality room will garner higher rates. And those are direct opportunities that investors can see today and are frankly paying for it. From a transaction standpoint, we are still seeing enormous interest in the Greater Toronto area, both suburban and downtown, and that hasn't changed in the last couple of years. Hotels generally in Eastern Canada are a little bit less expensive than Western Canada, but we've seen a lot of interest in the Toronto area. We're also seeing renewed interest in the Montreal market, and certainly with the change of government, that's been a real positive sign. We continue to see interest out west. Vancouver is still a high barrier to entry market, and with that, we are seeing activity as those assets are being brought to market. The sellers have been some of the REITs and the public companies and some of the institutional owners. And they've been disposing of non-core assets. And generally these are older hotels that need capital, need repositioning, need rebranding, frankly. And with that's the opportunity. So the investor's perspective on these is that they are buying on a per pound basis, really per key basis. The cap rate isn't as critical, and they see the opportunity to putting in money, repositioning the asset and operating it. And we think that's going to continue. And there just happens to be more of those opportunities in Eastern Canada at the current time than there is out west. Market's been exceptionally strong. We've seen 3 or 4 very strong years back from 2009, excellent recovery. We've seen investment volumes ranging between $1 billion to $2 billion, last year being the single biggest peak since 2006 and 7. The primary markets right across the country are showing significant rate and occupancy growth that results in very strong RevPAR growth. So we've seen RevPAR increases in the major markets anywhere between 4 and 8% on an annualized basis. And really we haven't seen that right across the country in a long time. So full flights means busy hotel business in this country. It's really the only way to get around between the primary markets. So that's always been a good indicator. We're in direct contact with a lot of owners and operators on a daily basis, and they have certainly complained far less and are actually way more encouraged than they have been in the past. And we hear it. And if it's not going well, they'll complain. If it's going well, they'll just tell us a little bit. But it's certainly a positive indicator. Most people are quite happy right now. We've seen major private equity coming in, some institutional equity, as well as some public companies looking to acquire some of these assets. So it's the confluence of a number of different buyer profiles that make it really compelling for a seller to dispose in this kind of market. I think the market remains exceptionally strong. We've seen really a very active financing market, first time in a long time, lots of equity, both on the private, institutional, and private equity side. We're seeing preliminary signs of offshore interest, and we've seen it in some recent mandates, genuine interest in being in the market, combined with strong operating fundamentals. It makes for just a very strong period, and I think we're in for a pretty good run. People don't have to buy a hotel, but certainly if they want to be in the space, when certain assets come to market, I would say move with speed and move with surety. I think that's really, really important these days. Underwrite them, understand them, but these are not necessarily once in a lifetime opportunities, but certainly once in a decade type of opportunities to acquire strategic assets.